Hello good people, it's me Kumonawa, your money manager. Today I'm taking you through unit trust versus exchange traded funds. I'm expanding on the video here that I shared yesterday. Please go and watch that video which takes you through how to invest in stocks. What are unit trusts really? We normally use these words. A lot of people have been asking me what really are unit trusts. Let me take you through what unit trusts are. I'm going to try to explain it in very simple terms. First, I want you to understand that unit trust is not an investment asset class. Unit trusts are a way of investing in various asset class. Unit trusts are a collective investment undertaking. So they work by pulling resources together from different investors, you and me, putting them in one pot, which they call a fund, and taking the money out of that pot and investing it in different asset classes. The different asset classes could be stocks, it could be bonds, it could be cash, it could be property, it could be alternative investment. Let me give it an example. I normally like to say that unit trust, and this is the popular explanation that I give. So it works in the same manner with Motelo. With Motelo, what we normally do is it will be like, maybe it's a group of friends, a group of 10 friends, we all come together, we all want our money to grow, and we agree that, you know what, let's pull our resources together and put them in this pot and then take this money that we have collected from each and every one of us, go and invest it somewhere. By so doing, we have the advantage that we'll be able to have a bigger pot rather than when we were doing individually. So it's essentially what happens with unit trust. And then someone could be asking, but what are the advantages of me investing in a unit trust or investing through a unit trust? It's very simple. The first advantage is convenience. It offers you the convenience in the sense that you can invest with very little amount. You can start investing with very little amount. From as little as 200 or 300, you can start investing. You don't necessarily have to go out there and look for huge sums of money for you to start your investment. So that's the convenience that you get from investing in unit trust. Also, over and above the convenience, there's also the convenience of liquidity. Liquidity in the investment world, we're referring to how easy it is for you to get your cash when you need it, or how easy it's going to be for you to convert the asset that you hold or you have back to cash when you need it. So with unit trust, normally you can get your cash as quick as within 3 days or 4 days, you can get your money out. The second advantage that you get from investing through unit trust is what we call diversification. Let me try to explain what we mean by diversification. This is what is going to happen. Let's say you have 10 pula, right? So with just 10 pula, you want fruits, or you want a variety of fruits. We know that 10 pula is just going to buy you one fruit. It can buy you one apple, or it can buy you one orange. However, you can take this 10 pula and buy a cocktail. So a cocktail is going to have a bit of everything. It's going to have a bit of banana, it's going to have a nachi, it's going to have an apple, it's going to have an orange, grapes, strawberries. All the fruits are going to be there inside to make a cocktail. That is what a unit trust is going to be like, and that is how it offers you diversification. As an example, maybe you invest in a unit trust in a fund that invests in equity fund. So what is going to happen here is this equity fund is going to have stocks of different companies all in this basket. So if you were investing individually, you were just going to buy one stock. But with a unit trust, you've got now a bit of everything, a bit of all the stocks. In a case of Botswana, 30 listed companies, you now have a bit of all these 30 listed companies that the unit trust invested in. So that is the diversification that you get from investing in a unit trust. Number 3, you get access to professional money managers. Unit trusts are managed by experts. These people, they know what they're doing, they do the research thoroughly, and they make sure that they pick good companies to give you a better return. So you get access to that professional assistance. And you must remember that these people are in business, so they are not going to get this professional investment expertise for free. They are going to charge you a fee for investing through them. Normally the fee ranges between 0.5 to 2% per annum on what you have put into this fund, into this pot. So those are the advantages of investing through a unit trust. You can see that diversification, convenience, and access to professional money managers and liquidity. Those are the 4 advantages of investing in a unit trust. So the disadvantage really is just the fact that you are going to pay a fee, and that fee you are going to pay it whether the fund that you invested in has performed well or it has not performed well. So that is really the disadvantage. So now that you understand what unit trusts are, let's go and look at the exchange traded funds. In short, we call them ETFs. So exchange traded funds, if I may explain them in very simple terms, it's a listed stock that tracks an underlying commodity or an underlying asset or an underlying index. I'm not going to talk about index here because in Botswana we don't have index funds, but I'm going to talk about ETFs that tracks an underlying commodity, because here in our stock exchange we do have listed ETFs. We do have a new gold ETF. New gold ETF, it tracks the underlying price of gold. So the underlying asset is gold, and here it tracks the rent price of gold. So if you want to be a gold investor, you don't necessarily have to hold physical gold. You don't necessarily have to go out there and buy gold in a physical form. You can invest in this ETF that tracks the movement, the price of gold, and this ETF is backed by actual gold. We do also have another ETF. We call it the New Platinum ETF. So if you want to invest in platinum, you can invest through this ETF that tracks the movement of platinum. There are many other ETFs listed on a stock exchange, but I just wanted to touch on this commodity linked ETF so you can understand. So you see, you now have unit trust on the other side, you also have ETFs on the other side. So these are some of the investment avenues that you can tap into if you want your money to grow. But like I always say, make sure that you get investment education. Make sure that you understand what you are doing before you can put your money into it. This is all that I wanted to share with you today. Unit trust versus ETFs. I hope now you understand the difference between the two, and you will start your investment. You will start your investment journey. If you've liked my video, please subscribe to my channel, leave a comment for me, leave a like for me. Let's start engaging, because your engagements are going to help me with creating content that will financially empower you.